Hi, everyone. This is Jennifer Schaus, and we are coming to you live from Washington, D.C. today. Thank you for joining us in our DFARS webinar series. We're covering the Defense Federal Acquisition Regulation Supplement on Wednesdays and Fridays this year. All of our webinars are complimentary and recorded. You can find our recordings over on our YouTube channel as well as on our website. And if you're looking for the PowerPoints, because some of them do include links to various government websites and other resources, you can find the PowerPoints on slideshare.net. It's also a free site. You can log into SlideShare with your LinkedIn credentials. And again, it doesn't cost you anything except 2 minutes of your time. If you're looking to register for any of our upcoming DFARS webinars, or you're looking for past recordings, if you hop over to our website, select the tab DFARS, you'll notice that we actually covered the DFARS back in 2021. So some of the information may actually be out of date. It's been 4 years. So if you're trying to jump ahead, just note that things may have changed since that time and are probably still continuing to change in the current administration. Again, on the right-hand side, you'll see the current schedule. If you've got a link to YouTube, it means we've covered it, and that's the recording. If you see the attendee link, it just means that we have yet to cover that topic, and you can register for the webinar. Again, they're all free and all recorded. A little bit about us. We are based in downtown DC and work with established government contractors. Our main focus is helping companies get onto the GSA schedule and other contract vehicles. Some of the other services that we provide are listed here on your screen. Speaking of GSA schedules, there was an executive order on March 20th that consolidates procurement through GSA, at least on paper. And as that rolls out, GSA will be the main contracting hub for the federal government. If you do need help with that, it is something that we can assist you with. So feel free to drop us an email. In the event that your company is selling to federal contractors, we've got advertising options in our newsletter, webinars, and events. We've got an event coming up on June 23rd. Ticket prices go up on June 6th. We expect a little bit over 200 people to be in attendance, and we've got confirmation from these 6 government departments. They will be sending their small business representatives, so we hope to see you there. We've got 3 from DoD, SBA, the VA, and NASA as well. Here's some stats on our advertising. Again, if you are interested in placing an ad in our newsletter or advertising in our webinars, here's the information for you. Okay, we also want to thank our in-kind sponsors, GovEvents, Fairfax County EDA, and Set Aside Alert. GovEvents is the go-to platform for posting events related to government and government contracting. You can find all of our events and our recordings over on govevents.com. The Fairfax County EDA offers an online calendar of events and webinars happening in the DC metro area. You can also find our webinars and our events on the Fairfax County EDA website. Set Aside Alert is the go-to publication for finding opportunities related to small, women-owned, veteran-owned, hub zone, and 8A businesses. If you're interested, hop over to setasidealert.com to get more information. We also want to thank our friends at the Virginia Apex Accelerator. That's a trusted resource and DLA-funded organization. They provide local training, counseling, and mentoring for aspiring government contractors, as well as matchmaking events. So if you want to sell to local, federal, state government, please contact your Apex Accelerator. You can visit the links there on your screen to review the training calendar, locate free resources, and schedule an appointment with your Apex Accelerator counselor. The actual slide has live links, so again, you can get the slides over on slideshare.net. Okay, we want to thank our paid sponsors, which is what makes this webinar series complimentary. BidSpeed, you can find them at our event on June 23rd. That's the platform that allows users to search public sector opportunities at the federal, state, and local level. Users can also find anything from a compliance matrix to teaming partners, incumbent point of contacts, expiring contracts, and proposal templates. Discover, manage, and secure government contracts with BidSpeed. BidSpeed is an official partner of the SBA's ETG Empower to Grow program. Contact BidSpeed today. And C3. Sorry about that. If you're thinking about contracting with the Department of Defense, you need to prepare for CMMC. That's the Cybersecurity Maturity Model Certification. C3 suite of CMMC solutions include C3 Command, C3 Catalyst, and C3 Core. These solutions answer the needs of every defense contractor. Whether your CMMC priority is a fast, defined path to compliance, or you need the flexibility to manage multiple environments, C3 offers solutions. They are your partner with a deep expertise in IT, cybersecurity, and compliance. Contact C3 today. WorkPlan. WorkPlan is an online contract management and accounting tool designed for federal contractors and hosted by AWS. Get and stay DCAA compliant, manage expenses, timekeeping, and forecasting, plus use the WorkPlan platform to manage your capture process and your CRM. Contractors can integrate their HR and payroll into this one easy-to-use solution. Contact WorkPlan today. Ateria specializes in Microsoft Cloud licenses and services for government and contractors. They provide a business advantage for Microsoft Government Cloud licensing, managed IT administration and security, as well as data intelligence services and solutions. They implement secure, compliant, and scalable solutions to enhance operations, reduce risk, and uncover opportunities. Contact Ateria for expert IT assistance. Okay, last but not least, we want to thank Gov White Papers. Gov White Papers is the central hub for government and supporting industry, government contractors to find and post content geared towards solving public sector challenges. With your free membership, you can add relevant white papers, case studies, data sheets, and more, making your content available to a wider government audience. Do you have the expertise but not the content? Gov White Papers can also create materials to meet your specific needs. Join for free today at govwhitepapers.com. Okay, the reason we are here is to cover the DFARS Part 230, which is Cost Accounting Standards. Lou Gaydon is joining us from Capital Edge Consulting, and he's got a great slide deck to run through. I'm going to put myself on mute. Lou, it's great to have you with us, and I look forward to your presentation. Just let me know when you're ready for your next slide.
All right, thank you, Jennifer, and I appreciate the opportunity to speak to everyone today. A little background on Capital Edge Consulting. We're a government contractor consulting firm, work with all sorts of different contractors, whether it be defense, Medicare, DOE, and so on, helping contractors navigate the accounting side as well as procurement and business system side of the federal contracting marketplace. A little background on myself. I've been doing this for about 20 years. First 10 years or so, I was in as a consultant, and then was Director of Government Compliance, Controller, and eventually VP of Finance for a government contractor out of the Chicago area. And a little over a year ago, came back to consulting. So this is my second time around with Capital Edge. And yeah, today we're going to speak about, I guess next slide, we're going to cover an overview of the CAS basics and cost accounting practice changes, as well as the disclosure statement, what's in the disclosure statement, what are the different sections and requirements to be completed. All right, you can go to the next slide. First section is the overview on CAS basics. Next slide, please. A little background on cost accounting standards. The process for establishing cost accounting standards started back, now what, 60 or 56 years ago, back in 1969. Over time, they created the Cost Accounting Standards Board. It was an agency of Congress, and the purpose was, exclusive authority to make, promulgate, and amend the cost accounting standards designed to achieve uniformity and consistency in cost accounting practices. Simplifying that, it's what are the rules around and allocating costs, what's a direct versus an indirect expense, costs coming from a corporate home office, so forth, how do you treat R&D, BMP, a litany of different topics that we'll cover the basics on today. So next slide, please. And CAS is, the big takeaway from this slide, it's a public law. So it's not necessarily, it's not just guidance, it is requirement and federal statute. So it covers areas including equitable adjustments and applicable changes. So if you have a contract that you're awarded, but wasn't necessarily subject to CAS to start, but you do have an amendment to that contract, it's above certain thresholds, it can be triggered. And we'll get into more detail on that later in the slide deck. And it also covers applicable flow downs to your subcontractors as well, or if you are a subcontractor, depending what's flowed down from your prime contract, CAS could be triggered. Next slide, please. Within FAR Part 30 and thus DFARS Part 230, cost is where cost accounting standards is covered. Next slide, please. As well as 48 CFR Chapter 99, that's where it's codified by law. And then within there, there's 19 individual standards. 9904 covers, covers, the traditional contractors when we think of them, but 9905 covers specifically educational institutions. Next slide, please. When we talk about CAS and CAS coverage, there's what's known as full CAS, which all 19 standards are applicable. And then depending on dollar thresholds and what a certain contractor may trigger, there's a subset of full CAS that's just only applicable as modified CAS, which is 4 standards, 401, 2, 5, and 6. And then there are several exemptions from CAS as well, depending on contract type, business size, and a litany of other things we'll get into later. Next slide, please. So for full coverage, it's triggered when you receive a single award that is classified as CAS covered, meaning it's FAR Part 15, you don't meet any other exemptions, it's non-competitive potentially, whether it's cost type or fixed price. If it's fixed price, if it's negotiated and sole source, for instance, then CAS may apply. And then subsequently, to receiving that trigger contract, any award that is CAS covered of $2 million or more would be subject. And then the other way to trigger full CAS coverage is if you had 50 million in aggregate of awards in the preceding period. So for instance, you had 25 awards worth 2 million each that were CAS covered awards. Your first contract of the subsequent fiscal year would trigger full CAS coverage on that contract moving forward. Modified CAS is a single award of 7.5 million. That'd be your trigger contract. And then while performing on that contract, any subsequent award of 2 million would be covered. So even if that 7.5 million award was over 3 years, and during year 2 of that award, you received a $2 million award that goes for 5 years, your coverage period would extend to the end of that $2 million subsequent award. Next slide, please. Here's a couple or several examples of exemptions. It's just a partial list, by no means a full list. If it's sealed bid, i.e., competitive or under the assumption of competitiveness. If it's a negotiated contract, but it's less than 2 million, so that we note the TINA threshold, truth in negotiation, it's now a truth in cost pricing data. CAS could change if there's been talks about that threshold changing at some point in time. It used to be 750,000. About 6 or 7 years ago, it went to 2 million. So if that number changes, it would have implications on CAS thresholds as well. Small businesses, prices set by law or regulation, i.e. GSA Schedule type items as well. Firm fixed price commercial items and firm fixed price with adequate price competition are typically the most common exemptions. And then the other being, we've spoken about a $2 million threshold. but you must have a trigger contract before that $2 million threshold comes into play. So if you had an example earlier, I mentioned, 25 $2 million contracts. Well, if you had 24 $2 million contracts and not a single one was 7.5 million, you'd only be up to that 48 million, and neither modified or full cast would apply. Next slide, please. So while there are cast goes from cast 401 through 420, which intuitively you would think that would result in 20 standards. There are actually 19 standards in here. I'm not going to read them off the list. You can look at them. We'll get into different, how either we classify and subset them in a couple slides down. So next slide, please. I'll just give everybody, 15 seconds to read through the listing here. Okay, and then here's the subset of how we partition out and think about the 19 standards. There's the basic standards, which are also the ones that align with modified casts: consistency in estimating, accumulating, and reporting, consistency in allocating for costs for the same purpose, accounting for unallowable cost, as well as your cost accounting period. And just, when you talk about some of these CAS 401, estimating, accumulating, and reporting, that means you have to estimate and price the same way that you are collecting cost on your ledger and at the same level. For instance, if you're pricing a bid and you price at a discrete part level, but you only collect cost at a component level, that's an inconsistency. You would need to collect the cost at the part level, not the component, or vice versa. You would need to price at the component, not the part level, as a high level example. And then speaking about cost accounting for unallowable cost 405, that's also whether your cast covered or not. The majority of 405 is probably in your government contracts regardless, because for 31205, which covers the allowable and unallowable cost, typically within, it mimics that quite a bit. So then the next subset we talk about are allocation of cost standards. 403 is when you have a home office expense and how the home office allocates to the varying business units. 410 is what we call business unit or segment level G&A, and how that allocates to the final cost objectives, with the most common methodologies being total cost input or value added input, in which you don't include subcontractors and materials in the base of your G&A. Usually we'll apply that in a value add example through a material handling or procurement overhead type rate. 418 covers the allocation of direct and indirect costs, and 420 covers independent research and design, as well as bid and proposal expense. Important note there is that's also covered for the most part, whether your cast covered or not, within FAR Part 31. When you look at, I believe it's 31205-16 or 18, I can't recall off the top of my head, covers IR&D and BMP and the proper treatment and the burdening of that expense going into your G&A pool. Okay, next slide, please. The compensation standards, 408, 12, 13, and 15. Again, looking at some of these standards, for instance, the pension standard is really aimed at, or pension standards are, primarily aimed at the defined benefit type pension plans. It does cover, defined contribution as well, but some of them are kind of aging out, as many companies don't still offer defined benefit plans, or if they do, they're grandfathered in, and it's more of the legacy component there. Then the asset standards, tangible assets, the cost of money, for your facilities cost of capital and capital under construction for 14 and 417. These are standards that a lot of people kind of forgot about or didn't really pay a ton of attention to, let's say 5-6 years ago, and when the interest rates were at or near zero. But now that cost of money and interest rates have risen, they become high dollar items that companies should focus on. Should include one important factor of cost of money to know is if you don't bid cost of money, you can't recover cost of money. So we always recommend getting that cost of money, whether the rate is, as it was several years ago, near zero, or as it is today, in your bid, so that you can recover that cost of money. Because when I believe the treasury rate right now that is around anywhere from 4 to 4.5%, and that can result in large dollars. And when you're talking about cost of money under capital, for capital under construction, that's tracking that cost of money onto your balance sheet and then amortizing it over the useful life of that contract or that asset, sorry. So if you're building a new, facility, you can't include that cost of money in your current year rates, but you calculate that cost of money as part of your total asset, and you amortize that cost of money into your rates over the useful life of the asset. Next slide, please. And then just other standards, use of standard cost, accounting for materials, and accounting for insurance cost. Okay, next slide, please. The effect of contract modification. So mods are, as I mentioned earlier, under the terms and conditions of the contract, do not affect CAS applicability, but if the modification adds new work that wasn't part of the original scope or contemplated in that original scope, the government may take the position that that this would trigger CAS coverage. It's subject to certified cost or pricing data, and depending on the thresholds, it can get incorporated into a contract that originally wasn't CAS covered. Next slide, please. All right, now we're going to talk about the basics of cost accounting practice changes. FAR 302-1 defines a cost accounting practice change at a high level. You're changing the way you allocate something, changing the way you assign the cost, or how you measure cost. And once you have an established practice, a change in any disclosed practice requires notification to the government, and most likely the government's going to require at the minimum what we call GDM, general dollar magnitude, impact of that change on your existing CAS covered contracts and priced options, or as well as outstanding bids. And then it may require a second level, which is called a detailed cost impact, which is at its individual contract level, where GDM's more at a holistic level of all contracts. Next slide, please. The CAS clauses that require price adjustments price adjustments are with interest if it's an increased cost to the government results from a failure to comply with CAS or a failure to follow a disclosed practice consistently. Then price adjustments when a change in price is required to comply with a CAS that becomes applicable or is necessary to remain compliant. Next slide, please. So a submission of a cost impact proposal, it needs to comply with the new or modified CAS, and changes from one compliant practice to another compliant practice to remain in compliance with CAS. So if something comes up where your business may change in the type of business you're doing or whatnot, and you had a certain methodology for allocating expense, but let's say before you were primarily a supply chain company delivering parts and materials, but now you take on a manpower heavy contract and you need to change from a material base of your overhead to have a separate overhead or a combined overhead that's based on labor. You're required to make that change to be compliant because now that you're heavy labor, calls of beneficial relationships more in tune with a labor overhead. So that's an example that could come up. And then there's the unilateral accounting practice change, which it changed from one compliant practice to another that a contractor elects to make, but the government has not determined to be desirable. So when the government's looking at desirability, it basically comes down to, is it going to save the government money? It doesn't mean that you can't make the change, but with a unilateral accounting practice change, you're not going to have any upward adjustments in your price to offset downward adjustments. All right, next slide, please. Desirable cost accounting practice change. This is the contractor elects to make a change from one compliant practice to another, and the government determines that the change is not detrimental, i.e. it's not increasing the cost of the government for the most part, and changes may be desirable even if costs increase on existing contracts or subcontracts. So that kind of goes against what I have been saying, but it's 99% of the time comes into play where it's considered detrimental if the cost increases to the government. They always have these out exemptions that maybe you can win or not, but it's not typical. And non-compliance is contractor fails to comply with an applicable CAS. The contractor fails to consistently follow any disclosed or established cost accounting practice. So those are examples where you're going to have to do a cost impact for failing to be compliant with what you're required to do. And there's a retroactive look back on CAS. It's not just forward looking as it is public law. So next slide, please. Again, getting into types of changes, the mandatory change to comply with a new applicable CAS. So if there's a change or a new standard to CAS or something that you now have applicable that you didn't, an equitable adjustment is allowed. The net increased cost of the government would be allowable, and the net decreased cost of the government are also allowable. Unilateral voluntary discretionary change would not be not agreed to by the ACO. Government doesn't consider necessary and beneficial to its interest, and the net increase to the government are not allowable. That's, again, the net increases on your existing CAS covered contracts, including priced options or outstanding CAS covered bids. Next slide, please. Types of changes continued. A unilateral voluntary change that's sanctioned would be agreed to by the ACO. It's considered desirable and not detrimental, and an equitable adjustment is allowed upward or downward. Next slide, please. Cost accounting practice changes continued. The contract requirement, no aggregate increased cost as a result of a change in cost accounting practice. So that means you make a change in practice, and items that let's say multiple changes and multiple contracts with varying agencies. If you have an increased cost as a result of the changing cost accounting practice in aggregate, the government's not going to accept it. They may, sometimes there's positions where the government will accept an practice change that increases cost, but the net against one that decreases cost, as long as in the aggregate they are not increasing costs in total. Increased cost, when there's an increased cost of the government on fixed price contracts, practice causes the allocation of less cost to the contract. So the government, if you have a fixed price contract, is considered an increased cost if the cost on a fixed price would go down. So it's inverse. So if you had $1 million in cost on a fixed price contract before, but now it's only going to be 900K, that 100K change is considered increased cost to the government because you're assigning less cost to a fixed price contract, which implies you're assigning more cost to a flexibly priced or cost type contract. All right, next slide, please. when you have a cost impact or a cost accounting change, the cost impact and general dollar magnitude proposals, they must be submitted within 60 days or mutually agreed upon date after. Typically when a contractor is making a cost accounting change, they aim to do it in line with a fiscal year. So if your fiscal year is calendar year, you're submitting those, an updated disclosure statements required 60 days before that change occurs. So you're usually notifying the government around November 1 of the change and doing your GDMs then. Next slide, please. So the data required to be in a cost impact proposal, each contract, as well as, prime and sub, and the calculated impact by type of change. So even within a single contract, you can have fixed price and cost plus CLINs. So you'd have to do it at the CLIN level at an individual contract, but the cost or profit fee and price amount on each cast cover contract needs to be in there. The contract's grouped by contract type, whether it's fixed price incentive fee, cost plus fixed fee, or cost plus incentive fee, or any other type of flexibly priced contract. And then by various departments and agencies as well. So you need to classify it by your customer, Army, Navy, Air Force, NASA, DOE, CMS, etc. Next, please. Other items include contracts and subcontracts that are or will be affected by the change / non-compliance. System for identifying all contracts and subcontracts containing the clause of FAR 52-230-2 or DFARS equivalent. Format of the cost impact proposal is typically not specified. You can come up with various Excel models and formatting as long as they are intuitive and can be followed and can be supported and detailed with notes and tie out. Next slide, please. All right, now we're going to talk about disclosure statements. So a disclosure statement is a description of your cost accounting practices. Typically, it goes hand in hand with being fully cast covered. However, there are times where a segment may be modified cast and have the disclosure statement requirement, depending on if they're part of a larger organization that has other business units that qualify for full cast. But typically it goes hand in hand with being fully cast covered at a segment level. And this is where segments, where the last bullet point support one to note, that's what we're talking about, where you're not an otherwise fully cast covered contractor at the segment level, but you have contracts that exceed 2 million, unless the segment's cast covered awards are less than 30% of the total segment sales for the period of less than 10 million. So if you have a full cast covered affiliate and you have to meet this exemption on your cast covered awards, even if you're not fully cast covered at that segment level, to not be required to do the disclosure statement. Next slide, please. The general background is touched on in concepts. You're describing your cost accounting practices, both covering how the allocation of the cost of final cost objectives, the assignment of cost to cost accounting periods, as well as the measurement of that cost. Next slide, please. Measurement of costs, that's talking about, are you using standard cost or actual costs? If you're in a manufacturing environment, a lot of times you're using a standard or average cost for your labor and production. You're defining the asset book value as well when we're talking about the measurement of cost. Assignment of cost to cost accounting period, accrual versus cash basis. I mean, most contractors you're using when you're cast covered, probably flying with GAAP and using an accrual basis, as well as meeting the depreciation methodologies and requirements that CAS establishes. So there's usually a difference, from a tax depreciation purpose to either GAAP or CAS, and you gotta have established depreciation methods with it for both purposes. And then allocation of cost, that's when we're talking about your overhead, your G&A, or other indirect expense, and how the composition of those expense pools and how those expense pools allocate to intermediate or final cost objectives. Next slide, please. Okay, the disclosure statement, there's 8 sections of a disclosure statement. Not all of them are applicable to every contractor. Part 1 is applicable to every contractor. But when you talk about a home office, for instance, if you're an operating segment and you're fully CAS covered, but you have a separate home office that also has to do a disclosure statement, the home office may just complete, part 1 and part 8, whereas the segment would then complete parts 1 through 7, but wouldn't do part 8 because they're not a home office. And we'll get into in the subsequent slides what each section here covers. So next slide, please. Here's some basic information in the cover sheet and certification. You have to have your name, your address, your POC, the type of reporting unit. Are you a home office? Are you an intermediate home office, or are you a segment? So if you think about an intermediate home office, that could be, a shared services center or, a business group. If you're a large corporation, you may have, a couple intermediate home offices, one that covers, services, while another one covers manufacturing. And that you have business leadership and shared services at that level, and they would act similar to a home office, allocating to the segments that it benefits. The effective date of the disclosure statement and the identification of, is it your original or is it a revision to an existing? And if it's a revision, you have to mark within the disclosure statement with a red R every single spot where there's a revision. And then the name of your agency and auditor that the disclosure statement will be submitted to. Next slide, please. Part 1, major items, type of business, are you a corporation, not-for-profit, etc. The type of government sales, there's a check, a bunch of boxes to check. You pick which one, or if it's other, and if you pick other more than one, you have to describe on a continuation sheet. Description of your cost accounting using actual versus standard cost, integration of the cost accounting system with financial accounting system, i.e., are there any memorandum adjustments or memo not on the official GL records that are used for calculating your indirect rates, your final claim to the government. And then also, how do you treat and identify unallowable expense and define what is your CAS fiscal year. Typically, you want your cost accounting year to align with your fiscal year, but sometimes contractor that just has one contract that's triggering CAS may elect to have the cost accounting year align with that contract year. It's not typical, but I've seen it before. Next slide, please. Part 2 is defining your direct costs and how you treat those direct costs. You're required to describe the principal types of those direct costs. So what do you define as material? What do you define as direct labor, and how is that charged? As well as what are other direct costs that subcontractors, third parties, travel, outside services, etc., that you may classify as other direct costs, and how are those treated and whatnot. And then also the treatment of inter-organizational transfers as well. So next slide, please. Part 3 is direct versus indirect cost and the disclosure statement format. Part 3 has several different tables with different types of cost elements that you have to select. You know, is this type of cost treated as a direct cost, indirect cost, sometimes direct, sometimes indirect, and depending on those elections and how you mark those, there's a continuation sheet. So if you ever pick classification E, sometimes direct, sometimes indirect, you have to explain in detail when would that cost element be treated as a direct cost versus when would it be treated as an indirect cost. So one that I think of is severance expense, for instance. A lot of times we recommend, you know, contractors pick that as E, sometimes direct, sometimes indirect, because, you know, general severance that's just happening as part of normal course of business, you're probably classifying as indirect. But if there's a termination for convenience, you'd want to describe it and be able to, you know, as part of your termination settlement, recover directly that severance expense that you had to pay out, rather than it going into your overhead or G&A and being spread out across all contracts. Next slide, please. So part 4 is the indirect cost. In this section, you're going to be describing all of your indirect pools, whether they be service centers, which, you know, may allocate to other indirect pools and final cost objectives, final overheads, as well as G&A. There's, you know, 4.1, 4.2, and 4.3 cover you know, the service centers, the overheads, and the G&A. And you also here have to describe how you allocate and collect IR&D and BMP to cost objectives. Next slide, please. Section 5 is depreciation and capitalization. There's a section here talking about tax per depreciation per tax versus, you know, financial purposes, and are they aligned or are they different? If they're different, identifying how they're different, as well as criteria for capitalization and the thresholds for capitalization. You know, there's CAS sets thresholds when you're talking about capitalization of single items, minimum capitalization thresholds and useful lives, as well as when it's a bulk purchase, and how you classify those bulk purchases and depreciate those over time or amortize. Next, please. Part 6 talks about other credits and costs, how you're charging those credits for compensated personal absences, for instance, as we talked about earlier, treatment of severance and supplemental unemployment, and, you know, just treatment of other general credits. If you're have an Amex, company Amex card that, based on volume, you get a credit from Amex, how do you identify that credit and where does it go? Is it something that can be identified discretely to a contract and the related expenses that were procured on that Amex, or is it more general and you're going to offset it as a credit to your G&A expense and spread that savings across all contracts? Next, please. Section 7, deferred compensation insurance. This is where you're describing your stock plans, your restricted stock, as well as your pension or 401k and all of the insurance plans that are offered to employees in which the company incurs expense. One thing I will note here in completing disclosure statements and helping customers through that process, while Part 7 isn't necessarily to be you know, overly complicated, it is one where it ends up being the long pole in the tent in completion quite a bit, because you're going to have to bring in sometimes outside actuaries for their inputs, or people outside of the accounting and finance organization within the company and require their inputs, because it's more of an expertise niche area where you're going to need your benefits person and whatnot, and it's just not always naturally intuitive for that group of people to complete this. So there's a lot of hand holding that's usually required. Next section, or next page. And then Part 8 is home office. So here we have to describe from the home office, how do you aggregate the expense into pools and the method for allocation. If there's a threshold criteria that CAS establishes for dollar values and what for the preferred method of allocation for what's called residual expense. You think about your C-suite type expense, and typically it's the 3-factor formula, which takes into account, 1/3 of the base being your total payroll dollars by business unit, another third being revenue, and another third being net book value of assets minus inventories and some other items. I think that covers that one. So next slide, please. Yeah, and that covers our topics for today. If there's any questions or anything, please don't hesitate to reach out directly to me or through Jennifer. My contact information is up on the slide there. So it's been a pleasure speaking, and yeah, go ahead, Jennifer.
Sorry, I was just going to say thank you so much, Lou. It was a great presentation. So any closing remarks, anything you wanted to revisit? I think you did a great job covering cost accounting standards.
No, I would just say, well, I guess just closing remarks. This is a lot of information that, like the times can go pretty fast through things. So I know you have the slide deck, you'll be publishing it, and people can listen again. But if there's any questions or anything anybody may have, please don't hesitate to reach out. I know 99% of this information, but if there's something that, came up that I don't know, I have colleagues and whatnot that I can reach out to and get back to you on. So I'm confident we can answer any questions if there's anything anybody has.
Great, thanks so much. It was good content. Thanks for everyone who took time out of their day to join us. In the event that you are listening to this on our YouTube channel or watching it, give us a like, leave a comment. We would love to hear from you. Subscribe to the channel. It doesn't cost you anything, and you'll be the first to get notified anytime we upload new content related to government contracting. Again, all of our webinars are complimentary. The slides are over on slideshare.net. Log into SlideShare with your LinkedIn credentials or use any Yahoo, Gmail, or other email account to set up a SlideShare account. And that's a wrap. We will pick up DFARS Part 231 on Friday of this week. So we hope to see you back there for that. Thanks again, Lou. Thanks again, everybody. And we will talk to you on Friday.